Okay, everyone. Today we're covering the fundamentals or the principles that Kristen and I use when we're investing in real estate. We teach this course, so if you're interested, navigate to the link below this video and you can go and sign up for one of our full classes. But I'm going to give you a little bit of a hint of what the first principle in this class that we adhere to when we're actually investing in real estate ourselves. So, the first principle is real estate should be safer than what you actually think. There's a lot of horror stories out there about real estate, but it really, if you enter into a solid investment opportunity, paying attention to the full 10 principles of our real estate model, then it really won't, there's very little things that could go wrong to make it a bad investment for you. Now, there's no doubt when you look at the stock market over the history of the stock market, and you look at all the data for how property is appreciated in the United States, stock market has outperformed real estate. I think the stats on stocks are 8 to 10% return, historical average. And if you look at real estate, it's somewhere between 3 and 6% return. Bonds are below that, 2 to 4%. And if you look at the full spectrum of the risk, bonds are probably the most predictable. Real estate would be the next predictable or steady. And the stock market on a daily basis, it's going up or down, and there's no real rationale for it. And that is the reason why the stock market it's hard for me to invest in it. Something that I don't understand, where one day it could be going up a high percentage, and then the very next day, with very little logic, it goes down, and I can't explain that succinctly and confidently. For me, I don't know that I want to invest my money in an asset like that. Look, and we're diversified. We have a stock portfolio that we're building wealth in. But it's a very, very long-term play for us, and honestly, I put my money in there kicking and screaming because, again, I can't explain it. Now, real estate, there's very few highs and lows that happen on a daily basis if you're managing your real estate the right way. And by managing your real estate, you're going to check on your property, making sure your tenants are living in the home the right way. You're taking care of the normal maintenance of the property so that there's not a ton of wear and tear that make larger things break. Little things like that will help your real estate asset maintain a consistent value or produce a consistent return over time. The beautiful thing about Austin is when you put someone in your home, the traditional term length for a lease contract is 12 months. So for 12 months, your return on that asset is pretty predictable. There would have to be a scenario where your tenant couldn't pay their rent anymore and just stop paying, and then that would hurt you. But that's happened very few times, and I've always been caught back up with my tenants. We work with them to let them pay what they can, and then we make it up in the long term. So on a daily basis, the stock market could be up and down, but real estate, they pay once a month their lease, and it's pretty consistent over time. The last thing that I would say is performance during a recession. Our current environment right now is one of a recession that many people can't explain outside of, there's a pandemic from a virus creating havoc. The stock market is extremely volatile, making major moves up or down every single day, and it's large part due to uncertain data or a feeling that people have or things like that. What's happened during this recession for our real estate portfolio? Every day, our renters are in the house, they're paying their rent, they're living their lives, doing the best that they can. So our real estate portfolio has continued to perform. I certainly can't say that for everyone. There are assets out there where people, their tenants aren't paying. But again, as long as you're putting the right people into your homes the best that you can, you mitigate that risk, or at least have the opportunity to mitigate that risk. And in recession in general, there's been 5 recessions, or if we look at the last 5 recessions in our history as a country, In 4 of those recessions, real estate wasn't impacted at all. The values remained consistent. In some of those recessions, it increased. The only recession where real estate actually decreased in value was a recession that was caused by real estate. So in the long term, I would say that real estate is a very stable investment and one that should be safer than you think.